Good afternoon, everybody. Mike Nobles, Crossview Realty. Boy, do I have something for you today. So, welcome to part two of mortgage lending, and I've got my friend Rusty Davis with me, and he's from First Coast Lending. So, we're going to start today with some background information, and that is with when you're looking at the MLS or Zillow, there's going to be a stipulation on the homes. Basically, it's either it's active under contract, or it is pending. So we're really looking for active. Active under contract says that they've accepted an offer, but you can still see the house and you can still put an offer in. Pending, basically, you're out of the game. Okay, you can't go take a look at the house and you can't put an offer in. It's a closed system there. So the next thing that we're going to be looking at when we're looking at homes is the different types of lending, because there are several different types, and this is where I've got my friend Rusty Davis here with me, and he's going to tell you a little bit about that. Rusty, can you tell us a little bit about the FHA loans?
Yeah, I'd love to tell you about each one of the loan types. So as Mike said, there is something called an FHA loan. FHA loans are great for first-time home buyers, and they're great for any buyer, whether they've owned a home in the past or not, that has a lower credit score, typically below 680. Now, what makes an FHA a great loan for the right borrower? Well, it's going to be a couple of things. One thing that's really great about an FHA loan is that interest rate is typically about 0.5% lower than a conventional loan would be. So that's one thing that's really great. And then the second thing about an FHA loan that's really great is that the lender wants to make sure that the livability conditions of the home are up to standards. And so that looks out for your best interest. That gets me to a conventional loan. Now, there's a lot of misnomers with conventional loans, but just know if you're a first-time home buyer, you can still go conventional. It requires a 3% down payment versus a 3.5% that FHA has. Although if you've owned a home or been on the deed of a home in the last 3 years, you can still put as minimum down as 5%. So that could be right for the right borrower as well. Now, you might have heard like, oh, it takes 20% to put down for conventional, and 20% is nice because you won't have private mortgage insurance, but at the same time, that doesn't exclude you from that program. And then one of my favorite programs, one that I hold near and dear to my heart, are VA loans. You've heard a lot of probably off-kilter things about a VA loan, but I will tell you, if you have earned your entitlement through service in our United States military, then a VA loan is a phenomenal loan to go with. The interest rate is lower than the conventional interest rate. They do allow for a wide variance of credit scores that they will allow. And most often with a VA loan, what really makes them really great is that they do not require any down payment, and they do not penalize you for not having a down payment. So if you have entitlement, if you're interested, have any more questions, please do not hesitate to reach out, and we can get those answered for you. Now, we didn't mention it, but there are things, loan programs called USDA. Those are fantastic programs. They're for rural areas, and a property has to be designated USDA to go that route. But there's a lot of different things with those. So if you have any particular questions, please let me know.
Well, I've got a question for you. So in a situation where you're using a VA or an FHA loan, is there other stipulations, such as, I know that some houses don't qualify. Condos a lot of times don't qualify. Can you tell me a little bit about that?
Yes. So the big thing with FHA and VA is that they are, one of them is federally backed by the government. The other one is federally insured by the government. And what does that mean? That means that the lending guidelines are a lot stricter. So if you come across a listing that says like cash or conventional, that may be because they can't pass the inspections that are required by the government for an FHA or a VA loan.
So Rusty, how about the closing time? Is it about the same for all different loans?
Yes, this is something that me and Mike work with quite frequently. But most of any loans out there, we can get closed between 25 and 30 days. If there are any like really abnormalities with the potential property or with the client's background, we will discuss with you ahead of time, and we'll make that designation at the time of contract. But generally, a 30-day contract is more than enough time to get you started into underwriting, through underwriting, and then clear to close on the other side.
Gotcha. And I appreciate the help today. This is some good information. So if you like what you heard, and hit the like button and subscribe. And I think we have a part 3, do we not?
Sounds good.
All right, sounds good. Thank you, everyone.